Welcome to the Early Stage Investor, where we only cover assets and industries that could potentially provide life-changing returns. That's why we cover uranium. Not only has it given life-changing returns to investors before, this is the chart of Paladin Energy. This is a uranium miner. It went from 71 cents to $75, meaning it 100x'd the last time the world thought we would have an emerging nuclear renaissance. And the supply crunch in uranium wasn't even as significant back then as it's going to be in the future, right? So this is from Bannerman Energy. This is their prediction, a persistent cumulative supply gap of approximately 150 million pounds of uranium over the next few decades. So we're just getting started in this early stage space, and that's why we keep tabs on the news of this space every week to see how feasible these life-changing returns are. Well, in the short term, over the last year, the Sprott Junior Uranium Miners ETF is now only up 14%. The S&P 500 is up 26%. Early in the year, macro conditions were much more favorable, so uranium miners were massively outperforming the market, but we've seen softness. It's still a tough economic environment. Interest rates are still high. Big tech, which has hundreds of billions of dollars of cash on its balance sheet, doesn't need to worry about interest rates. Big tech make up the entire S&P 500. But if you're a small cap investor, then you'd compare to the Russell 2000, which is actually on track currently with uranium miners over the last 12 months. So short-term major macroeconomic headwinds, which are most likely going to cause a massive market crash, which always happens whenever interest rates are this high. Just go back throughout history. Whenever interest rates are this high, the market crashes. The Fed is forced to lower interest rates. The growth assets, which take advantage of a lower cost of capital, meaning lower interest rates, skyrocket. So that's just what we've been dealing with. That's the short-term macroeconomic setup, right? What matters is the long-term, potentially life-changing fundamentals for certain assets, especially when we can get them cheap, right? Well, what really matters is uranium the next oil or not? Because the answer to that question has major implications, right? Well, to start, nuclear energy is set to be the fuel for every single cargo ship on the planet. Regulatory assessment of nuclear-powered cargo ships. A joint development project agreement has been signed between Lloyd's Register, Core Power, and AP Moller Maersk to conduct a regulatory assessment study to determine the safety and regulatory considerations for a potential nuclear-propelled container ship to undergo cargo operations at a port in Europe. We already have nuclear submarines, so it's just a matter of time before these massive vessels are powered on uranium instead of oil, right? Uranium is the new oil. Also in hydrogen power, clean hydrogen powered by nuclear. This is from the Office of Nuclear Energy. They're saying the problem is that about 95% of the hydrogen produced in the US comes from natural gas. The solution: create hydrogen without emissions using clean power sources like nuclear power, the largest source of emission-free electricity in the US. Again, it's the new oil. It's even replacing natural gas. That's the long-term plan, right? So as the nuclear infrastructure gets built out, we see massive companies like Atkins Realis revving up their nuclear business to seize on the energy transition. Their nuclear division revenue leapt 41% year over year to $358 million in the quarter ended June 30, right? 41% growth in nuclear infrastructure providers because there is a rush to build out as much nuclear infrastructure as possible globally, right? That's why Citigroup forecasts a base case spot price of uranium of $98 per pound by year end, $105 in Q1 2025, soaring to $115 in Q4 2025, or $160 if their bull case plays out. Where is the price of uranium right now? $81. They're projecting 20% upside in the next few months and more than that over the next year, right? The Citigroup research team, usually pretty massive. They usually spend time on what they research. That's their conclusion. This is almost an objective fact at this point. What is happening in this space, right? We have TD Bank, a massive bank, giving Denison Mines a price target of $3.75 Canadian, right? Why? Because of their strong balance sheet supported by uranium sales. So we're really just getting started in this space. If you look even further out, we have Gen Z voters supporting climate action and nuclear energy, right? Their parents might not have supported nuclear energy. Gen Z, the next generation, definitely supports it. And millennials also support nuclear power, right? So we're just getting started in the early stages of the nuclear renaissance.